It's the last big policy week of the year, and central banks aren't going quietly. Markets are hoping for a little Christmas magic, and they might need it. Next week, no fewer than 9 central banks take the stage, including the ECB, the Bank of England and the Bank of Japan. The Fed may have cut rates, but everywhere else the pressure is rising as global interest rate cycle shifts. So what will these last meetings of the year deliver? Carsten Brzeski is the global head of macro for ING. So Carsten, markets are pricing in 2 Fed cuts this year after this week. That's even though officials themselves signalled one. Which storyline do you think will win?
I personally think that the narrative of at least 2 additional rate cuts will eventually win. And why is that? Because I think the US economy will first go through a soft patch over the coming month. And this alone is reason enough for the Fed to continue cutting rates. The inflation story that the Fed was talking about is indeed also correct, but I think that is something for in the course of 2026 when the US tariffs then will be passed through to consumers. So for me, I think there's still room for the Fed to cut interest rates by 50 basis points in total, probably in the first month of 26.
Let's turn to next week, and markets think that the ECB could open the door to future rate hikes. Is that really in play, or will President Lagarde keep her cards close to her chest?
Peter, I think markets get carried away with themselves, and probably also by the comments that executive board member Isabel Schnabel made, because she was then hinting at a potential rate hike in the future. Of course, everything is possible, but really look at the situation right now. I cannot see any justification over the next month for a rate hike. Eurozone growth is somewhere around potential. Inflation is currently still slightly too high, but over the coming month, we should see inflation sharply coming down when you look at producer prices already right now. So all these leading indicators point to a further slowing in inflation. So in all honesty, I rather think that in the shorter term, so between now and late spring 26, there rather is a risk or a chance that the ECB might be forced to cut rates 1 or 2 more times, but rather than hiking rates. If you do the fast forward to in 12 months from now, end of 26, early 2027, when all this fiscal stimulus has come through, indeed, then we might be talking about more inflationary pressure and an ECB that might then consider hiking rates. But for now, I think the ECB is in this good place and will stay on hold for a long while.
Well, a Bank of England cut looks almost locked in, but recent decisions have been razor thin because of committee divisions. Is a cut really that certain?
It looks like it, but like you already said, the divisions at the Bank of England have been pretty sharp. Actually, very similar to what we saw with the Fed a few days ago, where there had also been quite some divisions. And I think what we're also seeing with the ECB, where there's also a division between hawks and dove. And I think that is probably a nice characterization of monetary policy in general at the current juncture, namely that all central banks in the Western world are somehow grappling with the challenges, namely that inflation has come down, but not enough. But at the same time, we're also seeing more fiscal dominance with government debt increasing. And we see economies that somehow have shown resilience, but are clearly far away from thriving. So back to the Bank of England. And indeed, it will be a very close call. But I think that we could see another rate cut in the UK.
Well, finally, Carsten, a Bank of Japan rate hike is also widely expected. But the bigger question is what comes after? What should we be looking for in this meeting?
How hawkish will the Bank of Japan actually sound? We are expecting a big fiscal stimulus package from the new government. If this is really then approved and coming through, I think this is another argument for the Bank of Japan to continue hiking rates. We don't see so many additional rate hikes, but 1 or 2 more in 2026 is clearly possible.
That was Carsten Brzeski from ING. Don't forget, you can watch more videos on Reuters.com.